Looks like we're live right now. All right, we're gonna watch our video today. We'll watch the video tomorrow. We'll put a link somewhere. Remember, or I might try to actually download it. That way, then I can take it home and adjust that video just enough to where you don't see that lady's burns. All right. Remember, we're talking about the legal or the legal concerns. There we go. Now we're cooking with gas. Talked about all this fun stuff the other day. Assumption of risk. You all remember what that is? Well, how many of you in here today have assumed risk? Everybody. How? How did you do that? Got in a car. Got on a school bus. You did something. You know that there's the possibility a school bus can land up in a ditch, but what's the possibility? Really low. So you make that judgment. Now, how about this? How many of you would get on a school bus if you saw it was on fire? The assumption of risk, you see how the difference is. Aubrey. Aubrey, that's 2 times in 2 seconds. So we talked about that, the assumption of risk. Come on now. Here we go. Bingo. Tell me this is not wanting to cruise over to that one. Product liability. We talked about that 2 days ago, right? If I make something, do I have to make sure that it's safe for you to buy? Yeah, you need to. Otherwise, you're going to get in hot water. How about if I make something and don't worry about that? Not a great thing, is it? You will end up probably being sued. Now, insurance. Anybody here? But you're all fish. Nobody here. Y'all don't drive cars yet, do you? Yeah. So, but I asked you the other day. I said, "What do you have to have if you drive a car?" One of you said gas. You got to put gas in it. You got to have fluids in it. You got to have tires, right? Seat. Yeah. But the state says you have to have insurance. Why? What is insurance? Yeah. It can pay if you get in a wreck. Pay what? Pay who? Pay that person. The person pay off that person's car or fix that person's car. Yeah. If you got. But what if I say I got enough money? I don't need insurance. You still have to have it. Now, what about I say I just want the absolute minimum insurance? You know what the minimum insurance is in Texas? For liability insurance, the minimum is $40,000. Okay? $40,000. Okay. If you just got the minimum insurance, right? And I'm cruising down the road, and I see a brand new Escalade, and total, I mean brand new. It's still got the little stickers on the side and everything. And total it. Then what? You're really in hot water. Okay? Because that $40,000 is not going to cover a brand new Escalade. What about a brand new Corvette? $120,000. Yeah, you're pretty much in trouble. So when you buy insurance, not only do you want to buy your liability insurance, but you want to buy under or non-insured motorist insurance. So that means if she crashes into his brand new Corvette, she's only got $40,000 and there's a $60,000 or an $80,000 difference, right? His insurance will then kick in to what it can. It all depends upon how much you want your monthly bill. But at the same time, your monthly bill is going to be cheaper than if you crash into a brand new Corvette, right? So, but there's insurance requirements, all sorts of things, okay? That's just auto insurance. What about life insurance? Yeah, who really gets the money if you have life insurance, right? And how does that help you? You have to die in order to collect, right? And if you die, are you going to collect? No. Now, always remember this, you know, you never want those who are benefiting from the life insurance to be better off with you dead than you are alive. Think about that. So I've got some life insurance on me, and I've got, let's say, $5 million, right? My wife is the beneficiary. So am I bringing home $5 million now? No. So what might she get to thinking? It could be. Yeah, could be murder. And that's like, you know, the number one cause, murder and jealousy are the two causes of, or money and jealousy, the two causes of murders. So you never want them to be better off than what you were, if you were here alive. Now, should you insure children? Why? Okay, let's just say that in this pocket, I've got, okay, a seashell. That's a good example. I got a seashell in this pocket. Can you get those anywhere? Are they very expensive? No. Okay, should I pay to insure it? If I lose that seashell, they'll get me another one just like it. But meanwhile, I'm going to be paying $10 a month. Why? Now, what if I reach in this pocket and I got a seashell, but it's made out of 24 karat complete karat gold, and it's got, let's say, 10 ounces of gold in it. It's worth $12,000. Should I insure it for $10 a month? Why? Because if I lose it, I'm out $12,000. But what if I lose this? Is this getting me anything at all? Okay, well let's look at it this way. Your parents, right? Do they bring money into the household to pay for the bills? So they're an asset to the family, aren't they? What about the child? Do they bring money into the household to pay for the bills? Do they cost money? Yes. So they're not an asset, they're a liability. You don't insure liabilities, do you? That's why you only get liability insurance when you're driving a hoopty. You don't get full coverage, right? Because if your car worth $500 gets in a wreck, here's $500. But it costs you $500 extra to pay for the insurance that year. Doesn't make sense then, does it? So what about children? Should you insure children? Asset, liability. Take emotion out. We love children, but are they assets or are they liabilities? They're liabilities. So a child dies, I'd say at the most get 10. At the absolute most, $20,000 worth of life insurance. For what? Funeral costs. Funeral costs. I know this sounds terrible, but once the child dies, right, there's more spendable income within the family. Right? Because I'm not buying that kid any more groceries. I'm not buying that kid any more clothes or shoes or, I know it sounds terrible, but if you think of it in a financial aspect, you don't need to insure a child more than what it's going to cost for funeral expenses. All right, now what about mom and dad? All right, so let's say dad's bringing home $100K. Yeah, woo. All right, how much do we insure dad for? A lot. Well, let's say if it's $100K, he's bringing home $75,000 after taxes. So you're looking at $75,000. How long in the future do you want that income of him? Do the kids get out of school? Is that going to be 10 years, 20 years? 10 years, you're looking at what, 750,000? 1.5 million for 20 years? That's pretty tough. That's going to cost some bling bling. All right. What about this? What if instead of me doing 1.5 million, I just say I'll cut it in half cut it even less than half. Let's go 500,000. We'll tighten our belts, and meanwhile, what we'll do is while we're still alive, we take the difference in the premium and pay ourselves and put it in the bank. See, there's a whole lot of stuff about insurance that you got to know. Do we play with insurance here in the training room? Every day. What kind of insurance? Health insurance. Accident insurance policy. So let's look and see what we got up here. It says to obtain insurance. If you're getting insurance, you are betting that you will die. You're betting that you're going to be sued. And you're betting that you're going to get in an accident. Okay? Wow, that's not real good. So you're betting against yourself. If I was betting for myself, and because I'm a pretty good driver, so if I bet that my driving skills are so great that I'll never get in a wreck, why buy insurance? But they're called accidents for a reason, because you didn't do it on purpose. All right? So you're betting against you. The insurance companies are betting on you, saying, yes, you're not going to get in a wreck. Yes, you're not going to get sued. And yes, you're not going to pass away until the actuaries say you're going to pass away. Okay? Do you understand how that? Do you see what I'm saying? They're your biggest fans. They're going, no, you're not going to get in a wreck, because then they can keep collecting that money and not have to pay out to fix somebody's car. All right? Insurance company is betting you're not going to happen. So you're better to bet against you than for you, because just like I said, you're driving down the road, you make one mistake, you pulled out too early, you did not see that really low profile sports car. You saw the great big pickup coming down, but right behind them is a really low profile sports car, and bam, you hit it. There's $100,000. Where are you going to come up with $100,000? You're driving a hoopty. If you had $100,000, you wouldn't drive a hoopty, right? So that's what's happening when you're betting, when you're buying insurance. Get closer. There we go. Now let's talk about like health insurance. That's been in the news a lot in the last 6 years. The the alleged Affordable Health Care Act, right? So general health insurance, policy that covers illness, hospitalization, and emergency care. Got it? Just a general health care plan. All right? It's basic. If you get sick, you get the flu, can you go to the doctor? Yeah, you can. You were raking the leaves, and the tree fell on you, and you broke your arm. All right? Can you go to the doctor? Yeah. See, one's an accident. The other one is an illness. Two different things. All right? General health care plan. How about you cut your eye open, you need stitches. Yeah. Cut your forehead. Now, what about secondary insurance? All right, what's primary school? Did you all go to primary school? When was that? Grade what to what? Elementary. Primary. First. Means it's first. Secondary school. Did you go to that first or second? Secondly, yes. So, secondary insurance means that you can have more than one insurance policy. So, let's say that she sprains her ankle. And she does it all the time. And she's got health insurance. So, there she goes. She walks in with the Blue Cross Blue Shield policy. And in that Blue Cross Blue Shield policy, she has what's called a deductible. All right? What is a deductible? It's the first amount of money that has to be paid before the insurance counts. But you're on YouTube now. You are. Ah, thank you. So your deductible, and you'll see that lower in your deal that talks about what is it? Vocabulary? Where is it? Common terminology. Next one. See that word deductible? We're going to go through these words. So when you hear that word, write down what it is. on your note. Deductible. I got an insurance policy here at school, right? Every month I pay a premium. What's my premium? This is in your notes. Doesn't have the definition, but you'll need to know it. Premium is my bill. I pay my bill that they give me every month for me to have that insurance. That's my premium. So yesterday I went to the doctor. All right? Did I pay for the doctor visit or did the insurance company pay for the doctor visit? Nope, they didn't. You know why? I had to. Because I had to pay my deductible first. So with our insurance plan right here, the first $2,500, $2,500. I'm already paying for insurance. But on top of that, for the first $2,500 comes only out of my pocket. They don't even start doing insurance until I get to 25,001 or 2,501. Once I crack $2,500, then they start paying. I know. Now, why do they do that? Keep my premium down. The other reason why insurance, in my opinion, do that is if I've got a higher deductible, am I actually going to go to the doctor for every little thing? No, because I have to pay for it every time. If I got a lower deductible, let's say $200, oh, I'll kick that real quick. $200, here you go. There's 2 Benjis. Now, start paying people. So that's why these higher deductibles are more common than what they used to be. It hadn't been 6 years ago that I had a $200 deductible. And now it's $2,400, $2,500. So the family health insurance works like this, okay? Somebody got hurt, so I've got my insurance policy, all right? So right now, he has changed his name to Davis, and he is my son. He is playing athletics, right? He is playing athletics, and he sprains his ankle real bad, and we're worried about, is it just a sprain, or did he actually get a fracture in it? So we're going to take him to the orthopedist. My insurance, all right, I've still got that dangling deductible, all right? And so that dangling deductible standing right there, but he did it at school, so now he's got the secondary policy, which pays after my insurance. Yes. So now there's 2 policies on him. Okay? So we go in, I give him my Blue Cross, Blue Shield, or Aetna, or whatever it is that we're on. And then I also give him the school insurance. Okay. So I'm not going to pay right then. They'll send me a bill. This one says we're not paying anything until it meets up to here. Well, this one says we only have a $500 deductible. So the first $500 is now going to the orthopedist, and then they kick in already. Once the total bills get to $200 or $2,500, then mine starts to kick in also. All right. Most athletes are covered by a family insurance plan, where the family are covered by a plan from a parent at work. Got it? Let's go back one here. Let's see if we can find that. What was it that I... Come on, go back. We're going forward. So the general policy, the secondary policies, most high schools and colleges are using this now, all right, where it works to help pay your deductibles and help cover your other costs. Now, there's another deal that's on here. There's your terminology. What's an allowable charge? Remember, the secondary policy is only for accidents, because that's what's going to be happening at school, right? In athletics, it's going to be an accident. So let's say that she comes in and she says, I think I got the flu. I want to go to the doctor, right? And she wants me to fill out the policy form on the secondary policy. Is that going to work? No, it's not an accident, so it's not an allowable charge. Okay? If we got athletes who get shin splints, that's an overuse problem. Is that an accident? No, it's not an allowable charge. But if you fell down and you hit something, yes, that's an allowable charge. You got kicked in the shins, or you sprain your ankle and it looks like this one, that's an allowable charge. All right? Beneficiary. A beneficiary is a person. It's what? It's who benefits off the policy. So on my health insurance policy, who's the beneficiary? I am, because I'm benefiting from paying my premium. All right? On my life insurance policy, am I the beneficiary? I can't be. I got to be dead for it to pay off. So whoever I have decided will be the beneficiary. So he who benefits. All right? What are the benefits? Can you tell me what the benefits are in a policy? The benefits are what it will pay for. Okay? What it will pay for. So you might buy a policy that covers everything except for pregnancy. Yeah. And you have to buy extra to cover that child care. Right? And that's usually how it happens. So the benefits might only include, okay, up to $1 million. That's your benefit. Up to $1 million, and this is what we pay for. And you have to read those benefits when you're buying insurance. What's a claim? When I say something happens, it's when something, you have to fill out a claim. I mean, there's not like a insurance fairy that flies around and says, bzzz, oh, I saw you get hurt. Let my insurance know. Doesn't happen that way, right? How are they going to know? How's the insurance company going to know? You don't know? They don't know unless you tell them. And so you fill out a form, and that's you making a claim. Got it. Deductible, we talked about that. What about dependent? You know what a dependent is? All right. Anybody in here a dependent? Yes, you all are. Okay. Am I a dependent? Pretty much, yeah, true. All right. Can somebody else claim they take care of me? Can somebody? Yeah, right. Can somebody else claim that they take care of you? Give you housing, shelter, and also insurance, health insurance, right? So here's mom or dad or whatever. They've got the policy, and then they can write and pay more underneath it to cover not just them, but hey, let's cover the kids too. Why not? They get sick. So a dependent is one who's covered by the primary insured. What are exclusions? Pretty simple, isn't it? Exactly, it's excluded. We talk about the secondary policy here. It does not cover overuse injury. So that's an exclusion. It's not going to pay for it. All right? Explanation of benefits. What's a benefit? Huh? That's what you get out of it. So I go to the doctor, I come back, they're going to send me an explanation of benefits. They send it in the mail. You get it inside of a week. They're so fast with that. And they say, okay, you went and saw the doctor. All right, that's great. They billed $900 to look in your ear. And we're going to get, we adjusted that. And so instead of $900, they only want $600 because we're the insurance company and that's how we work. And out of that $600, what we're going to do is we're going to pay $500. You owe them $100. Okay? That's your portion of it. Well, a whole lot better than $900, ain't it? That's what I thought. So that's where they send you explaining what your benefits were for going and seeing the doctor. We talked about premium, and everybody remember that? We just talked about it. It's your bill that you have to pay in order to have insurance. So, accident policy, professional liability insurance, and catastrophic insurance are the main ones that we deal with inside of an athletic setting. All right? The accident policy is just what I've been telling you. It's a secondary policy. You have to have an accident, and then it covers your stuff. The way that it works with most places is you must see the doctor within 30 days of injury. You also must file a claim within 90 days of that injury. If you miss either of those two deadlines, it will not work. They won't pay. They say, too bad, you waited too long. All right? What's professional liability insurance? Got an idea? It's liability insurance that's professional. True. All right? So let's just say, like right now, let's say that Miss Bates is over there and she didn't realize that the auto sound was turned on way too high for that body part. But she had it on the right body part, but the next thing you know, it burns the person, burns the athlete. Right? Yeah. She didn't take those little cares what we talked about the other day, and she was then negligent, probably. So now that student's going to sue her, right? Well, I've got an insurance policy just in case you sue me. Yeah. Who has those? Who has those? They call it what? This thing about a doctor. What's it called if you're a doctor? Malpractice insurance, right? Have you not ever heard of a malpractice lawsuit? Yeah, well, that's it. That's liability insurance. What about a lawyer? Do you think they have some malpractice insurance? Yes, exactly. So it's great to have. If you join one of the many professionals organizations like, I don't know, the teacher association of this or that, you pay them $50 during the year and it covers you like $1 million in professional liability insurance. Yeah. What about catastrophic insurance? A catastrophe? Could be a catastrophe, but how about a financial catastrophe? So there was this guy over in East Texas, and like our insurance doesn't just cover athletics, it covers everything with UIL. What would that include? Band. What about theater, drama? So this kid in East Texas one time, they went to the local college, right? And the door smashed this kid's foot. I mean, crushed it. Like 5,000 pounds on his foot. Okay? A door, a great big garage door type thing. Smashed his foot. I mean, crushed it. I don't know, but I can't, no, but it's a lot of therapy and a lot of surgeries. But because I can't remember the last day that I did not get up out of bed and use my foot every day. Okay? So, his accident insurance policy, right, paid up to $25,000. And to tell you the truth, when it comes to medicine, that's not a lot of money. No. That's like one surgery. Yeah. So what happens then is that there is a different policy called catastrophic policy. The catastrophic policy goes up usually up to $2.5 million. So if it goes past $25,000, then from $25,000 in one all the way to $2.5 million, that second policy, the catastrophic policy, will pay. Got it? I wish that would just, it's not doing just near that good. We are? That's the last one? You sure? I guess you are. Yeah, it is over there. Questions? All right, tomorrow's Friday. So tomorrow, huh? Supposed to put those in at lunch. Were they not there? That's where it's supposed to go. So, no questions? None?